All right, Canada, pull up a chair, pour yourself something strong, maybe a double double or a double scotch, because this week's economic update, it's a blender of bad data, boiled expectations, and Bank of Canada paralysis. Welcome back to the Wise Old Owl Show, where we don't sugarcoat the facts, we just call it like it is. Simply economic insanity. Let's start with the fire alarm blaring at the Bank of Canada. February CPI clocked in at 2.6% year over year, hotter than the 2.2% markets expected from inflation. But let me underline this for the folks in the back. Core inflation, the stuff the Bank of Canada actually cares about, is now averaging about 2.8%. And the monthly core CPI change, 0.7%. That's not a trend, that's a cannon shot. Put simply, prices are rising faster than a Toronto pre-construction condo in 2021, and we're nowhere near the 1.3% comfort zone. It's like trying to put out a grease fire with maple syrup. The bank wants to cut rates to support the slowing economy, but inflation just slammed the brakes on for them. Now, here's where it gets weirder. While inflation is partying like it's 1979, the soft data, confidence, sentiment, optimism, is collapsing. The CFIB business barometer hit all-time lows in March. Consumer confidence in the basement, digging towards bedrock. You'd think we were back in 2008 or mid-pandemic levels, but nope. It's just that Canadians are tapped out, anxious, and unsure if we're headed for a recession, a trade war, or both. This is the worst possible scenario for the Bank of Canada. Inflation won't cool, but consumers already have frostbite. And what's this? Population growth just hit the brakes. Q4 saw pathetic 0.15% growth, basically flat. Why? Because Ottawa finally realized that having an open door policy for anyone with a pulse and an Uber app might not be sustainable. Non-permanent residents are in decline for the first time in 3 years. Meanwhile, asylum claims, likely from temporary visa holders trying to stay longer, have tripled. Let's call it what it is, gaming the system. The feds know it, and cuts are coming. The consequence? Fewer renters, fewer lower wage workers, less housing demand in some areas, and for the first time in years, GDP per capita might go up. Oh, and while we're economically vulnerable, let's poke the bear. Trade tensions with the US are heating up, whether it's tariffs, retaliation, or a full-blown lumber-slinging standoff. We're not ready. Home prices fell in February, and not gently. Ontario sales down 20% plus. Active listings at decades high. Prices across major metros are cracking, and tariffs are about to add fuel to the fire. Now here's your consumer checkup. Spoiler alert, it ain't great. Arrears are rising. The number of delinquent mortgages ticked up again, and guess where the bulk of the damage is? Ontario. Surprise, surprise. Ontario isn't just leading in real estate listings, we're leading in mortgage delinquencies. That's like winning gold in the debt Olympics. And it's not just mortgages, folks. More Canadians are behind on at least one credit product than at any time in the past 10 years. Personal loans, credit cards, auto loans, all trending the wrong way. Even the banks are sweating. Gross impaired loans across consumer and commercial portfolios have jumped 60% year over year. RBC alone, up over 60% on consumer loans. That's not a blip. That's a storm surge. Now for the kicker, mortgage renewals are coming in hot. 110% jump year over year in January. 60% of Canadians will renew in the next 20 months, most facing a 30 to 35% jump in payments. That's not a soft landing. That's a concrete slab. And guess what? Variable rate loans are making a comeback. We're watching Canadians bet on rate cuts while core inflation is still on a double espresso. So what does this all mean, my friends? It means we're walking a tightrope blindfolded with a torch in one hand and a bucket of debt in the other. The Bank of Canada is stuck. Consumers are stretched, population growth is fading, and tariffs are looming. And confidence is evaporating faster than Tiff Macklem's approval rating. If you're not paying attention now, you're going to feel it later. Should the Bank of Canada cut, hold on April 16th? Or is it time we actually talk about discipline and responsibility in government policy? And before you go, hit like, subscribe, and share this video with anyone who needs to stay ahead of this chaos. I'm Vince Gaetano from OwlMortgage.ca. Thanks for listening. And remember, the Wise Old Owl's here to help you navigate through the noise and provide insight to the financial chaos in the current environment. Stay informed, stay vigilant, and together, let's chart a path to financial stability. Cheers.